Following the federal government's stimulus package announcement of 17.6 billion, the recent increase to 66 billion combined with more than 100 billion in emergency banking measures takes a total of 189 billion deployed in a bid to curb the economic impact of COVID-19. With a view to keep Australians in jobs, businesses in business, and ensuring the economy bounces back together stronger than before, what does a stimulus package actually mean for you or your business? Welcome to the Modoras Insights COVID-19 Economic Stimulus Package webinar with Q&A. I'm your host today, Stella. Thank you for joining us and to hear expert insights into the stimulus package, including the new opportunities for SMEs, how will the stimulus package potentially affect your bottom line, and how to make the most of the package on offer. If you just join us or are yet to submit your questions, please enter your questions into our Q&A features. Our experts will get to them at the end of the presentation. And supporting you through these changes, from making the most out of the stimulus initiatives through to managing the risk associated with the impact of coronavirus, Alf will be sharing with us today expert insights. Alf is the Director of Modoras Melbourne, bringing in excess of 20 years of experience and expertise across a broad spectrum of industries. With a refreshingly direct, no-nonsense approach, Alf specializes in challenging businesses to take an honest assessment of their operations and evaluate how their structure and strategy is working towards or against the achievement of profitability and sustainable growth. I can be direct, but I have found this to be the most effective approach for achieving a mutual understanding with my clients while exploring the opportunities and structures available to them. Alf explains each step of the process simply and clearly, meaning his clients are always fully informed of their options and reasoning behind his recommendations. Nothing makes Alf prouder than working with his clients to achieve results if they hadn't previously imagined possible. And without further ado, on to you, Alf.
Well, thank you, Stella. Certainly, I think you're right. It's certainly, listen to you, it is a time that we need to act and probably be about as direct as we can. I think we've, without wearing out the oft quoted sentence that's been bandied around, we are in uncertain times at the moment, and we've got a major health event that's now really developed into a major economic event, and that it's affecting pretty much every single person, every single business in this country and around the world. So our aim today is really just to cover off on those measures that the government has announced, basically on a federal level, in which we'll go through them, and then they're broken up into three major sections. There's a lot of ground to cover today, so it may feel like we're barreling through some of this, but at the end of the day, we will be posting a lot of this information online in our website, and also we'll encourage everybody to reach out to us in our various offices for further information and for further assistance. In terms of what we will cover today, general advice warning. Basically, like I said, it's a very high level coverage. We really can't give everybody specific advice as to their circumstances. The aim really is to cover it off in what you may be eligible for, what may affect you, and then take that further and speak to your specific advisor wherever they are. So let's kick off. And like I said, look, it's the agenda is the federal government stimulus package. It's almost $190 billion worth of measures that have been announced. And like I said, I think you can break this down into three specific areas. There's a lot for business. There are some measures for the individuals, and then finally we'll cover the superannuation packages. We'll spend a lot of our time on the first point, seeing that a lot of the meat is there, and the last two we'll go through them fairly quickly. In terms of what this package means for business, we've got five specific areas you can break this into, and I'll start with the first one, which is delivering support for business investment. This is where we've got already an incentive there for immediate asset write-off, which was due to end on the 30th of June this year, which would allow you to write off an asset of up to $30,000, so long as your turnover was up to 50 mil. So targeted at small businesses. That's now been extended. So it's now $150,000, and it will be available to businesses that turn over up to $500 million. Now, this measure does still finish on the 30th of June 2020. It will only cover, or the new threshold being the $150,000, will only cover those assets that are either new or secondhand that were installed and ready for use by 30th of June. If the asset was installed and ready for June before the announcement, you're still looking at the $30,000 threshold. So it is really only a small window in which this measure falls into. It basically means that you can maybe buy a new piece of plant and equipment, say $100,000, have it ready and installed by 30th of June or 30th of June 2020, and you'll just get an immediate tax deduction for it. What you do forego, obviously, is that there's no depreciation, so you're not able to write this asset off over multiple years. You do just get this one hit, which helps you, obviously, in this financial year, which is probably the one that will need it the most. Second measure under this heading is, it's called backing business investment. So this one actually covers from now until the end of next financial year, being 30 June 2021. There is a slight difference between this measure and the previous one, in that this one only covers new equipment or new depreciable assets. It does not, or the intention is that it does not cover any second-hand equipment. And this one is not an immediate write-off, but you will get a 50% write-off in the first year, and then normal depreciation will kick in from the 2022 year onwards. So in terms of an example, let's say that I've got $1 million worth of equipment. I'll be able to claim $500,000 in the first year, plus, if I was depreciating at 30%, another $150,000, being 30% of $500,000. $650 would be my allowance in the 2021 year, and then in 2022, 30% depreciation on whatever the balance is left over. So again, the measure here, or these two measures, are really aimed at enticing businesses to not pull back on any capital expenditure that they may have had in mind and possibly would have been reconsidering in light of everything that's happened. The government still wants businesses to keep investing and obviously keep functioning. So these two measures really aimed at business capital expenditure and not trying to pull this away. Second measure, which is I think the one that most people have been interested in, and certainly the one that's getting a lot of the questions, and this is the cash flow assistance for businesses. So this is now a second announcement. So it did start off at a at a $25,000 allowance, but it's now been extended to up to $100,000 per business. So this only affects those businesses that employ, and the measure really is that those businesses that are employing, they're withholding tax from employees, and these could be owner employees as well. So if you're running your business through a company or a trust and you also employ yourself, you're covered by this measure too. And it means that any withholding that you make, the government will give you 100% back on it. So in effect, if I had withheld, let's say $10,000 from my wages for this month, I lodged my activity statement for this month, that $100,000 is credited without me having to make that payment. Now, if I did, or if I had made that payment of $10,000 along with my GST, for example, then the government would give me that $10,000 back. So if you do happen to get yourself into a position where you are in credit, that can come back to you in a cash basis. In terms of how this works, we've got two types of employers, and you will know whether you either remit the PAYG on a monthly basis or whether you remit it on a quarterly basis. If you do, and there's two separate treatments there. For those that are monthly payers, obviously January and February have already been lodged. So the system effectively starts in March for you. But in order to even it up and to put you on an equal footing as to those payers that are quarterly, you will get 3 times the PAYG withholding amount for the month of March. If you are quarterly, you will simply get back the credit. You'll get 100% credit for the month of March or for the quarter ending March, and the same thing will happen again in June. The second part, that'll allow you up to $50,000 worth of PAYG credit or withholding credit. The second part of this measure is a further $50,000, which will apply from 1 July to the 30th of September. And what this means is that, or how this is calculated, will be on the basis of how much of the 50,000 credit you were allowed or you were eligible for in the first step. You will then get that same amount in equal installments in the second part of the year. So it is a little bit complicated, and what I would recommend here is to talk to your advisor. So if you've got a history of your PAYG withholding over the last, say, 5, 6, 12 months, and employment hasn't been affected too much. In other words, you haven't laid off everybody. You should be able to run a fairly accurate estimate as to how much you'll be eligible for and how these payments or how these credits will come back to you in your running in your account or in your tax account. One thing that we do need to highlight is that in the legislation that went through, or which was passed 2 days ago by Parliament, had yet to receive royal assent, but there is an explanatory memorandum that comes out with this bit of legislation, as it does with all bits of new legislation. The government or Treasury has highlighted some integrity measures. So they will be on the lookout for any artificial or contrived arrangements, and that this is their wording, where people are seen to be taking advantage of this measure when or by trying to generate an artificial type of scenario. So just be wary that that the ATO will be on the lookout for any kind of activity which just looks a bit suspicious. This measure won't apply to you if your business was not active prior to the 12th of March 2020, which is the day of the announcement. So again, this is aimed at trying to stop people from now setting up a business and saying, well, we can be eligible for this. These were active businesses at that time of the announcement. So again, for further details, you really need to speak to your advisor. The second part of this cash flow assistance is aimed at supporting apprentices and trainees. So in order to try and keep people employed, there is an incentive for any employer that currently has any trainees or apprentices employed by their business, that there will be a wages subsidy of up to 50% for the last 9 months. Or sorry, for the 9 months starting 1st of January 2020. So for that period, you'll be able to get up to $7,000 per quarter to keep an employed, or to keep employed a trainee or an apprentice. The other eligibility issue here is that your business must have less than 20 employees. If, on the other hand, you have a business and you take on an apprentice or trainee, then there is no limit as to how big you can be. So again, big encouragement for those businesses that are large, able to bring on employees and trainees that may have been let go by their prior employer. They'll be able to access the same kind of subsidies. Registration for this measure is not quite ready. Information that's coming out of Treasury says that it'll be ready by April 2020, and you need to talk to the National Apprentice Employment Network. In most cases, if you do have an apprentice or a trainee, you will have a point of contact with Department of Education, Employment and Training. I'd be talking to them specifically about how to access or how to access and how to implement this particular measure. So again, this one, like I said, is the one that's getting most of the attention. You do really have to run the numbers to see how will it affect you. You know, I would be doing this prior to committing to lodging your March BAS activity statement. So really talk to your advisor before you go ahead and make any decisions, before you go ahead and put pen to paper on that statement and lodge it with the ATO, because you know there may be reasons to look at how you set out those figures for this quarter, and obviously then for the next quarter or the next months if you're a monthly lodger. Third measure here, assistance for severely affected regions and sectors. This one really is something that's spun off the measures that were already in place to help out those businesses and individuals that were in both drought and bushfire affected zones. So this is in addition to this, and the announcement is that there's a $1 billion fund that's being put aside to support regions, communities and industries that have been disproportionately affected by the coronavirus. And here we're looking at tourism, agriculture and education. Again, this is really just an announcement at this point in time. There's not a lot of detail. This measure falls into I suppose the lap of the Deputy Prime Minister, who will be charged with managing this. I'd say it's a watch this space as far as what exactly they are going to do here. The second part of this is that there is support for airlines and airports. Again, don't know how many of the listeners this would affect, but there's a reimbursement of the aviation fuel taxes for airlines. Same as the Air Services Australia charges. So these are the airport services. There's rebates for domestic aviation security, and some more relief for regional aviation. So again, you know, there's about $715 million being set aside for that measure. The last point that I want to make on this one is that there is ATO administrative relief, and I think this is where it's going to affect a lot of people, and it may be an option that you do take depending on how tight the situation is. And so the ATO will be providing admin relief from certain obligations. And again, this is very similar to the concessions that the ATO was making available to those that were affected by the bushfires, you know, which seems like a year ago or more than that, but it really only was, you know, a couple of months back. So we're talking here about the ability to defer payments for up to 6 months. So if you do have an ATO debt, now is the time to get in touch with the ATO and see what you can do about you know, putting either a payment plan in place if you can make some payments, or whether you are able to defer it, and you will get some relief from that. The ATO does have the power to defer debts and negotiate payment plans, and they're very much open to this at this point in time. The other thing that you can do if you are paying PAYG installments is that you can vary your installments down to 0 for the March 2020 quarter, and then as an additional measure, you can ask for a refund of your installments for September 2019 and the December 2019 quarter. So if you are on PAYG installments, you can get some relief. A little bit of a warning with this one as well, in that by receiving back those PAYG installments, you've got to understand that you're not keeping any tax aside for whatever profits or taxable income you will have in 2021. So, you know, again, the measure is there, but I would be looking at this on a case-by-case basis. That you know, yes, I would implement it, but only really in a desperate situation. And obviously when I could be assured that there was not going to be a massive tax bill waiting come the time that you lodge your 2020 tax return. So, you know, this one's a little bit of a, you know, rob Peter to pay Paul measure, because it can have an effect if you're not aware of this come the time that you need to lodge your tax return in later in the year. So I think that was it. So this is what's available for those severely affected regions and sectors. Second last measure for businesses is the temporary relief for financially distressed businesses, and in this case, this is addressing those. Just going to turn this down. This is addressing the bankruptcy type of actions that you may be either a party to, or you might be at the wrong end of. So normally, if you've got an action against a company, or you can start creditor action by issuing a statutory demand for as low as $2,000, and that's the law as it stands. Well, that's actually been extended to $20,000. So in very simple terms, it means that you won't be able to issue statutory demands against any of your debtors if the amount is under $20,000. Now this measure will apply for 6 months. So really, it is there to ensure that, you know, people aren't being taken or taken to task as far as bankruptcy is concerned for very small amounts. We can envisage that there's going to be a lot of outstanding debtors and creditors in the next few months. And this measure means that, it gives people a little bit more breathing space before anybody can take action to recover these debts. So that's with respects to companies. Now, there is a similar measure with respects to individuals. And with an individual, the threshold was $5,000. Well, that's also been extended to $20,000. And again, it will also apply for a 6-month period from the date of the announcement. So a similar thing, if personally you are in debt, you've got a bit more breathing space before somebody can take some recovery action against you. The final part on this is that if you do happen to receive any of these notices, firstly, you really need to act upon them, but there is also an extension of time. Normally, you would only have 21 days to reply or address these issues. You now have 6 months as well. So everything seems to have sort of been pushed out as far as the time that we've got, and also the thresholds that we're working with. They're not as low as what they normally would be. So again, just giving everybody a bit of breathing space. Second measure under the temporary relief for businesses is the relief being granted to directors of companies. And again, if you are a director of a company, you'll be aware that one of your biggest risks is being a director of a company that is trading whilst insolvent. So again, bearing in mind that technically we may have more businesses over the next few months falling under that definition where they are trading while insolvent, there is going to be some relief against that. So as a director, you'll have more protection than what you would have in the past. And again, under normal circumstances, if you find yourself as a director in charge of one of these companies and you're not able to meet your debts as and when they fall due, the legislation forces you act very quickly to remedy the situation. This is, again, giving you some more breathing space. Again, this measure applies for 6 months. I would dare say that if the situation doesn't change or doesn't change as much as what we were expecting, this may well be extended. So a common sense measure, and I think works well hand in hand with the previous one about being able to initiate actions against companies and individuals. Final one here is that ASIC, again, has been given a lot more leeway as to how it will implement breaches against the corporation's law. So it can make the call on whether they really impose the law, or they drag companies and directors over the coals for things that normally would have happened, and given the circumstances now, there's just that little bit more a bit more relief in terms of, look, we can see that if your company is insolvent, we'll give you a chance to get back out, or if you've got a plan in place, you certainly will give you the chance to try and remedy that. So in these circumstances, approach ASIC if you do find yourself in any problems. Again, do this in consultation with your advisor. In terms of anything with respects to bankruptcy or insolvency, all of our offices do have points of referrals where we've got specialists that we can either talk to and refer you to, where you can get further details as to what your options are if the situation actually does look like it's very grim and you may not be able to pull through the other end. Final point for businesses is supporting the flow of credit. Again, this one's been about as popular as the PAYG withholding measure, pardon me, and we've got four measures on this one. The first one is the lending. The measure here is the ability to take out a loan of up to $250,000 per borrower for up to 3 years with an initial 6-month repayment holiday. Now, these loans are unsecured, so more often than not in business, when you go and borrow, the bank will want, or the lender will want, some security. These loans won't be secured in the traditional way. The government has said that they will guarantee 50% of these loans. Now, most of the banks have made announcements that they'll be assisting and they'll be able to provide products to fall in or to fit in with these measures. So recommendation here is, if you do have a relationship or a current relationship with a bank, if you currently have lending, the bank would be, or the bank that you're working with now would be the obvious option to go to talk to your lender about what's available and how this can be set up. It's like a line of credit. So again, maybe acting sooner rather than later is a prudent way of approaching this, because if you set up a facility for, say, the full amount, $250,000, and you're not using it, well, then you're not drawing down on those monies, you're not paying any interest. But if you do need it, you know you've got it there available. If you do wait to the time when you are in trouble, you've got to think that these loans are still going to go through an application and an approval process. So, don't leave it too late because it might be too late. So if you are going to go down this road, think about it in advance and organize it in advance so that you do have it ready if and when you need it. I can't think that the banks are going to be very flippant as far as handing these out. They're still going to put you through a fairly rigorous approval process. Even though they may fast track it, I would dare say that they're still going to be after a lot of financial information. They're going to want to know what your plan of attack is as far as how your business is going to deal with this current scenario and how it will get out, and over what period they're looking at. So that's the measure. As a side note, I did sit in on a seminar yesterday, which was hosted by the Chamber of Commerce in Queensland, and I do believe that the Queensland government also has a similar measure in place, again for $250,000, and this one is actually backed by the Queensland government as opposed to the federal government. So if you are in Queensland, you might be able to grab, both of these. But again, talk to James and Pete up there in Queensland, and they'll be able to assist you there. In line with the loan announcement, we do have a bit of a relaxing of the responsible lending requirements. One can't help but be a bit cynical. We just had a Royal Commission into lending, which really smacked the banks as far as responsible lending and a move away from low doc loans and those sort of things. Well, the government says, well, look, in order to be able to provide cash and funding to businesses, we're going to relax the normal rules as far as how hard it is to get a business loan. Again, this is a very, very temporary measure. It will only be in place for 6 months, and I think as soon as the ship steadies a bit, this will be pulled back, and we'll be back to our normal rules and the normal way of applying for loans, which means ticking the right boxes and being able to provide the correct information to satisfy the bank that it's not a silly loan that they're granting. The Reserve Bank is also sticking a fair bit of money back into the system. And they're doing this by allowing banks to access $90 billion of funding at a very low rate, which they are basically saying to the banks, well, you guys then need to on-lend this to businesses. So this is $90 billion at a fixed rate of a quarter of a percent, 0.25, to be able to then say, okay, banks, go out there and get this cash out into the businesses and see if we can keep the economy going. On top of that 90 billion, there's another 15 billion that is being made available to non-banking institutions, for want of a better word, for them to be able to do a similar thing. So the Reserve Bank is trying to sort of get money back out there to see if the banks can help, along with the measures that the government has introduced. Finally, the APRA, which again is not a big issue for us or those in business, they've announced a temporary change to the bank capital ratio. So banks are constrained by this ratio as to how much they can lend based on how much cash they're holding. So there are ratios here where they can't go too risky or lend way too much money. There has to be a reserve that they need to keep, and APRA does monitor this. So again, one thing that what they're doing now is that they're saying, okay, well, look, you know what, we're going to temporarily suspend those requirements. And again, the idea being is that they want to free up the banks to allow them to get cash out there, to get funding out there, to keep the economy going. I think the government's realised that, whilst their pockets are deep, they're not that deep. They're going to need the assistance of the banking system to keep this economy going. So that's pretty much it for the businesses. Like I said, that there's most of the initiatives, most of the work that's been done with respects to businesses, and I think the indication is really there that if we can keep businesses open, we can keep people employed. It means that there's less people having to turn to the government for support, and if we keep businesses alive, when we do get over this current situation, which we will, when we do get over this, we don't have to start again from scratch. We've got businesses that can just gear up again and get back to some sense of normality. So next item, where are we? Okay, so if we turn to what this means for individuals, there are only two, pardon me, there are only two measures here. The first one is payments to support households. And this is the measure that was introduced. Again, it was, I believe it was in the first announcement, which was the two separate $750 payments to those people who are on Social Security, veterans or other income support packages. Concession card holders too, I think, were qualified for this. I believe that about half of these people would be pensioners. So there's two payments here, a $750 payment, which should be paid, we should have been started from the 12th, 13th of March, and by the 13th of April, this will have already washed itself through. And then there is a second payment also of the $750, which will go out to those people who are eligible or who were eligible as of the 10th of July 2020. There is quite a big list as to who would be eligible, and the obvious ones: age pension, disability support pensions, carer payments, parenting payments, wife pensions, Austudies, quite a long list here. So again, this is something that I would probably look at the fact sheet to just check whether you are eligible or not. I could say it's, you could always call Centrelink, but from what I understand, the ability to get through to Centrelink at the moment is kind of questionable. And in fact, I think even the MyGov site crashed a couple of days back with just the influx of people trying to access both benefits and information on benefits. So that's the first one. The second measure is increased and accelerated income support. So this is an additional $550 per fortnight for those who are already recipients. So if you happen to be on something like a job start or job seeker payment, you would get that payment, but then you would also get this additional $550 per fortnight. Now, this is where if you happen to be self-employed and your business takes a big turn in as far as either you have to shut up the doors because you've got no income, or there is a more than 20% drop in your the income that you're earning, you need to look at this because you may be eligible to be able to claim the job seeker payment plus this supplement, which they're calling it a coronavirus supplement. So again, anybody who's lost their job, sole traders who have been impacted by a loss of trade, people who are self-employed, again, you could be eligible. The other thing that the government is doing is that they're actually waiving the normal waiting periods to be able to access these payments, and also the liquid asset test waiting period. So if you think of it in normal terms, if you lost your job and you received a payout of, say, your accrued leave or maybe a termination payment or something of the sort, what would happen is that Centrelink would force you to use that money before you were eligible for benefits. And in this case, those rules are being waived. So again, if you think of normal situation, you might go, well, I don't know whether I'd be eligible. Well, do you know what? You may be eligible given the current rules. The application, I believe, is easiest done through MyGov. So again, if you happen to have had some benefits along the line somewhere, you will already be registered with Centrelink. But if you're not, you will need a client number. I think it's a CRN, and then you can then process with the application. So again, grab the fact sheet on this one, talk to and talk to Centrelink, or access it via the MyGov website, and they'll be able to give you or they'll be able to help you through the process here. The final part of the package is with respects to superannuation, and again, only two items here. The first one is temporary early access to super. So this will allow people to access up to $10,000 from their superannuation balance before 1 July 2020. You'll also be able to access a further $10,000 from 1 July 2020. So you'll be able to do two hits here. I think we should have probably called it 30th of June 2020. So 10 grand now before the 30th of June, 10 grand from 1 July onwards. You need to be eligible here though. So firstly, you must be unemployed and you must be eligible to receive a job seeker payment, youth allowance, parenting payment, special benefits, or have been made redundant from 1 July 2020 onwards. So again, very specific requirements here as to how you'll be able to access it. Once you do access this payment, though, there will be no tax on this amount that you withdraw. Whereas normally, if you were to be able to access some superannuation, there was always going to be a tax element to it. Here, they're saying no. Those amounts will come into your hands, and they'll be tax-free. You won't even need to include them in your tax return. Again, the government seems to be pushing the use of the MyGov website for this. So the applications need to be made directly to the ATO. You need to use your MyGov, and I think most people these days are using the MyGov, especially if you are employed. You would have needed it to access your payment summary. So applications will be there. Now, I don't believe that this system is up and running as yet. From what we understand, mid-April is when this will go live, and you'll be able to put your application in at that point in time. But again, I would say, consider all the other options available to you. Talk to your advisor as to the wisdom of actually accessing superannuation. The final measure affects those of the people out there who happen to be self-funded retirees. If you happen to be pulling a pension out of your superannuation, you will know that you must make a minimum withdrawal every year to maintain that pension and that super fund in pension phase. Now, the rate starts at 4%, and as you get older, you must withdraw a bigger percentage of your balance. Now, there's two reasons why, or the main reason as to why the government has looked at this is because a lot of people may be holding on to, or may have a member balance that is backed by assets which have dropped in value, and there may not be enough cash to be able to meet, say, a 4% pension payment. That would then force you into selling assets to be able to get the cash to meet that payment requirement. Now, if we're selling assets now and they happen to be shares, you're probably going to be selling them at the worst possible time. So in order to alleviate this problem, they've halved the minimum requirements. So again, if you happen to be, say, under 65 and drawing a pension, you would have to meet a 4% payment or minimum payment. That's now 2%. So it will mean that you can cut back on the amount that you need to pull out of the super fund, and that may mean the difference between having to sell an asset at a very low price now and keeping it for later. So that's a good move there by the government. Final change here is the Social Security deeming rates. So again, some people might be self-funded, drawing a pension from superannuation, but also eligible for a part pension. The Centrelink or pensioner deeming rates are going to be dropped to 2.25%. So again, a little bit more relief for the retirees and the pensioners out there. So that pretty much covers the measures announced both 12th of March and over the weekend. I think the final thing I want to touch on is state relief. Queensland, New South Wales and Victoria have also announced some relief from payroll tax. Unfortunately, the measures taken by each state are not the same. So depending on where you are and where you pay payroll tax, the good news is that there is relief. The bad news is that it's not the same. So in the case of Victoria, which has been the most generous of the three, basically you will get back all of the payroll tax you paid this financial year, and you won't be required to pay anything for March, April, May and June. So that's a big help for businesses. Queensland did come on board, and that was yesterday. and New South Wales had a discount of about 25% on the payroll tax being charged for this year. So again, both sensible measures. And again, keep in mind too that in Queensland, you've got this extra loan, interest-free loan facility up to $250,000 and interest-free for 12 months. So again, good sensible measures to try and help businesses. Now, questions. I believe, James, you're on the line there. Do we have any questions for us?
Look, there's quite a few questions, and I've been
hang on, mate. Let me just turn your volume up.
Look, most of the questions have been in regards to accessing the cash bonus and how that actually works, and just covering off that, you know, for monthly remitters, it revolves around what you pay in PAYG withholdings in March, and for quarterly remitters, it relates around the PAYG withholdings in the March quarter. Some of the other questions have been about, well, what can I do with the cash bonus? If I lay off my staff, do I have to repay it? No, you don't. It's basically a cash bonus to be used in your business going forward. The other ones in regards, most common one is also regarding PAYG instalments. Basically, the ATO will allow you to vary them to 0 and potentially claim back whatever you paid for the December and September quarters. The key there is still remembering you're still going to have to pay your 2020 tax when it comes around. So you're basically essentially deferring your tax payment for the 2020 financial year until your due date of your tax return. So that's another one that's been quite common. That's probably the key ones that we've seen. I encourage everyone to have a look through the answers there, and any that we haven't answered, I still see I've got 21 open questions, so I'll continue to work through those. Yeah,
we did. I know when we spoke last night, we said that there was a lot of confusion, especially this week after the closing down of businesses that were either deemed to be essential or non-essential. And in terms of that, again, if you're not sure, reach out to us, or we can send you through the directives. But the way the directives have been approached has been that there's been a definition put on non-essential businesses. And so in the case of, say, the Victorian announcement, it says, here's a non-essential business, and it goes and specifies it, and it talks about, pubs, clubs, bars, cinemas, casinos, restaurants where you're eating in, indoor sporting centres and gyms. So by definition, if you're not listed, you're not being affected by this. So it doesn't mean that your business is considered to be essential. It's just that you're not falling in within that definition. Obviously, the way this is going to play out in the event that we have, and we do have stage 2 now, and whether we go to a stage 3 or a stage 4, is that they'll simply just add more businesses or descriptions of more businesses to that non-essential definition. And that's how they'll classify it. But we know that there's been a lot of confusion because you might consider your business as non-essential, or you might not say, well, my business is an essential service, and therefore I must shut up shop. Well, not necessarily. Have a look at the directive, have a look at the definition, and that will tell you whether you are definitely forced to shut or you can work. In terms of the way we're operating, I know today here in Melbourne, 60% of our staff are actually working from home. So even though we're not required to close the premises, we are running with most of our staff working from their home and being out of the office, and we're limiting the amount of contact that we're having with anybody. Even within the office themselves. it's quite an eerie feeling. So again, that common sense really applies there. But you know, a lot of people were worried about whether they could trade, and had the assumption that, you know what, come Tuesday they were going to have to shut up shop. Well, that really wasn't the case, and I'm actually glad that the Prime Minister, when he made his announcement, he actually stated the obvious. You know, if you can work, if you can keep operating, keep operating. And I think that's important, that we shouldn't lose sight of that. You know what, we need to keep the economy going for there to be an economy to get back up on its feet when all of this does blow over. Okay, so other than that, I don't know if there's any more. There's nothing else there, James, that you can think of?
No, I think it's been pretty much covered. The key thing is that I'd encourage everyone to have a chat with their accountants specifically, because there's obviously still, you know, as I said, 28 questions still to answer now. So there's obviously still a lot of answers that are people looking for. So I encourage them to chat to their accountant and get some specific advice on their circumstances. Some of the questions also, particularly with sole traders and trustees of trusts, are very difficult to answer without knowing their specific circumstances. So they do need to talk to their accountant on that.
Yeah, I agree. Look, I've just put up the contact points for the Modoras offices. So I know we're going through to both or to all three states: Queensland, New South Wales, and Victoria. If you do have one of the accountants that you're currently dealing with, please reach out to them. Whilst they may not be in the office physically, they're available via phone, they're available via email. We've all got this same information. If we can't, or if we don't know the answer to something, we can find it, or we can then point you in the right direction. I know that there were some questions about employment related questions as to standing down and how the Fair Work Act. We're not employment lawyers, and we can't advise you on those issues, but we certainly do have some referral points as to who we can point you in the right direction to, that can help you with those decisions. It's a complex area, probably far more complex even than tax. So in those cases, if you do have those questions, whilst we may not be able to answer that directly, we can certainly help you out. The same thing goes with the lending issue. You know, we do have referral partners, if need be, that we can put you in contact with in the event that you don't have a relationship or you don't have a current lending manager that you can talk to. So by all means, reach out. There's David in Sydney, Gold Coast and Brisbane. We've got Pete Etherington and James, and myself here in Melbourne. So we're all here to help, and we've got a full team, all willing and able to help you with that. So without further ado then, I'd just like to thank everybody for attending. I'd like to thank the team for hosting the webinar, and James, to you to helping out with the questions. Again, reach out to us, and good luck to everybody, and all our best wishes.
Thank you, Alf, and thank you, James. Yes, Modoras will be supporting you through these changes, from making the most of the stimulus initiatives through to managing the risk associated with the impact of the coronavirus. Thank you all for your attention today. Keep an eye on your emails, as we will be sharing more valuable information. Thank you, everybody, and have a good day.